Sticking with company news, Curro's delivered an A-plus report card, posting 2% growth in learner numbers and a 19.2% rise in headline earnings per share. Joining me now as we read through the earnings is company CEO Cobus Loubser. Cobus, thanks so much for joining us today. Now, as I mentioned, quite upbeat annual numbers. When you zoom into those numbers, you'll notice that Curro has accounted for recurring HEPS as well as earnings per share. Recurring HEPS and HEPS are up over 19%, while earnings per share took a knock, falling over 82%. Now, this was due to impairments. Cobus, just talk us through those impairments and the assets they were charged against.
So I think we, as an organization, are ambitious about expanding educational opportunity, and we've done so very successfully for more than 25 years now. I think if you look at what we've created is a portfolio of schools, a network with 182 schools around South Africa, and we've invested more than 13 billion rand in that portfolio to develop and acquire the schools. And of course, international financial reporting standards require every business to forecast future cash flows from its operations and to then discount that at its weighted average cost of capital. And in our particular instance, the cost of capital has increased by about 2% over the last 2 years as a result of the increase in interest rates. So we've forecasted our learner growth and our cash flows for the future, and we've done so prudently. And the increase in our weighted cost of capital has certainly put pressure on that calculation, and has resulted, at least in part, about a third of that number relates to the increase in WACC, and then the other portion of it relates to the extent that we have about 28 out of our 180 schools, which may not yield that level of return, 15%, in the foreseeable future, or as quickly as we perhaps wanted to. So these are not loss-making operations, they're not troublesome, they'll continue, and certainly we have high expectations of them. But in terms of the accounting adjustment, they may be lower yielding schools than what's required. So I think that's the impairment is a non-cash adjustment. It has no bearing on the ability of our operations to generate cash and profitability in the future. And of course, it deducted in terms of earnings per share, but added back in the calculation of headline earnings per share and recurring headline earnings per share, which of course went up by 32%.
Thanks for that, just clearing that up. Let's get back to the operational side of things. We've seen learner numbers grow, albeit at a slower pace. Is this just an example of South Africans valuing private schooling even in tougher times?
Yeah, I think parents make incredible sacrifices to give their children the best possible opportunities in life, and we are humbled by the extent to which parents trust us with their children and have done so in trying times. Certainly our high schools continue to grow as expected and have done well, but we really see the economic pressure on younger families who are find it harder to navigate the sort of challenges of higher interest rates, higher fuel costs, higher food costs, higher energy costs on their kind of balance sheets as they settle on their journeys through life. So we hope and we think that our consumers will get some respite in a lower interest environment if it does arrive, if we see some cuts, and we look forward to welcoming them in our corridors.
Listen, I've been crossing fingers and toes all year, hoping for those interest rate cuts. And I was just about to ask you to talk us through those dynamics between the strong demand we are seeing in your high schools and the lesser demand we're seeing in your primary schools. But as you've explained, it's more because of the younger families experiencing more pain because of the interest rates that are so high. Now let's move over to the company's plans on investing about 700 million, which would be used to upgrade its facilities. What schools will be targeted? And are we seeing more of that money being plowed into the high schools?
Yeah, I think you've summarized it reasonably well. So we're looking to invest about 700 million rand in our operations in 2024. a really important milestone in 23 when, for the first time in our history, we generated more cash from our operations than what we invested in capex. So we generated 875 million rand out of operations and invested 750 million rand in capex. Now, we expect to spend about 700 million in 2024, and that number is about half of it relates to the ongoing refurbishment, maintenance, and replacement of assets in our existing business. There's about 40 million we've allocated to solar and battery and similar energy kind of initiatives. That's after spending 80 million rand on that last year. And then we've allocated about 50 million rand relative to new schools and new opportunities, land, and so on. And about 250 million will be invested mainly in our high school facilities because, of course, over the last 25 years, we very much have established the key facilities for our primary schools and pre-primary sites.
So as you've mentioned, the company is in a good position. It is quite cash strong, but debt increased by just over 3%. How comfortable are you at these levels?
I think very. Interest rates are at really high levels, and it hasn't stressed our operations. And I think, if you look at the type of operation that we have, it has features of annuity income. We refinanced our debt about 18 months ago, and we're able to replace debt with less expensive debt. Our credit rating was increased or improved by 2 levels in the last year. So I think from our perspective, we're comfortable that 3 billion rand is a sizable amount, but we come that particularly in the context of the growth that we expect from our operations in the future.
Now, just before I let you go, I can imagine how tough it is to collect fees in this kind of an environment. Just give us a sense of what your debtors book looks like.
Well, I think every child matters. I mean, that's the philosophy. That learner-centered approach is a key philosophy in our corridors. So it's the hardest thing for us to do when parents cannot afford accounts and learners, because we can't educate for free, unfortunately. So it really is the hardest thing for us to terminate accounts. If we look at our debt and collections, we've really been on a journey over the last 3 years to professionalize and improve and just kind of in every aspect, do a better job there. And I think we have. So the ratios, all the key ratios of measurement in terms of aging of debt, of the number of accounts outstanding, the size or quantum thereof, the provision required for it, all of those measures have improved over the last 3 years. And that also goes, and it really is a testament to how parents are trusting Curro with the education of their children, despite trying circumstances. So we certainly, from our perspective, continue to drive high levels of execution on our campuses to give them the best possible education we can.
Cobus, thanks so much for joining us. It'll be interesting to see how the story develops in the next 6 months when we catch up with you again. Hopefully by then, interest rates would have been cut. Thanks so much again, Cobus. That was Curro CEO Cobus Loubser.